Global uncertainty definitely played a role, with the total market cap slipping around 1.8 to 2.8%, bringing us down to about $3.50 to $3.57 trillion. Not exactly what we hoped for.
Yeah, that's pretty clear when you look at the fear and greed index too. It dropped to 24 to 26, which is firmly in quote, extreme fear territory. Despite that cautious sentiment though, daily volumes held pretty steady around $155 billion. It's interesting how those two metrics can sometimes tell slightly different stories.
Well, absolutely. And if we dive into the specifics, Bitcoin saw a dip of 1 to 2.61%, pricing it around $103,854 to $104,771, with its market cap at about $2.09 trillion. Ethereum followed suit, down 2.6 to 3.71%, trading between $3,459 and $3,552, impacting its $428 billion cap.
Right. So the big players were definitely feeling the pressure. But then you have BNB, which actually managed to sneak in a small gain of 0.5%, hitting around $971. XRP and Solana, though, were also down by 0.8% and 1.2% respectively. And those AI tokens, they took a hit, down 6.3%, with D-Agent AI dropping 27%.
Wow, 27% is quite a drop for D-Agent AI. Layer 1s were also down 4.8%, and meme coins saw a 4.9% decrease overall. However, there's always an exception, right? POPCAT actually jumped 12.4%, leading Solana's rebound in that sector. On the ETF front, we saw positive inflows of $533 million for BTC ETFs, but ETH ETFs had zero inflows.
That's a good segue into the regulatory landscape, which seems to be painting a more positive picture. The U.S. shutdown finally ended after 43 days, with President Trump signing a funding bill which immediately lifted risk assets like the S&P and NASDAQ by 1.5 to 2%. That's huge for market stability.
It really is. And we also saw the Genius Act providing legal clarity for yield-bearing assets, which is expected to boost institutional inflow. Plus, the SEC's quote, token taxonomy plan is simplifying crypto classifications, signaling friendlier regulation. Big news for the industry, especially with Michael Selig's CFTC chair confirmation hearing coming up.
Globally, there's movement too. Hong Kong is allowing exchanges to share global liquidity pools, and Brazil is embracing stablecoins with 3 new AML rules by 2026. On the other hand, the UK has a proposal for a £20,000 stablecoin cap, while Kyrgyzstan is launching a $50 million national stablecoin. Quite a mix of approaches worldwide.
It certainly is. And speaking of institutional adoption, Coinbase has reincorporated in Texas and expanded to Singapore for USDC/SGD transfers via Standard Chartered. SoFi Bank relaunched crypto trading, and JPMorgan's JPM Coin actually launched on Base, marking the first major TradFi use of a public blockchain.
That's a massive step for TradFi. Visa's also piloting stablecoin creator payouts, and Circle's USDC circulation is up 108% year over year at $73.7 billion. Even Bill's Retail is now accepting over 99 cryptocurrencies. It seems like more than 60% of institutions plan to increase allocations, with ETH being called, quote, Wall Street's favorite blockchain.
Well, amazing to see the widespread integration. In terms of ecosystem updates, we're seeing an XRP ETF launch via NASDAQ this Thursday, and the Link ETF is advancing to DTCC approval. Uniswap has an $800 million Uniburn and fee switch proposal, and Solana's Upexi reported $78 million in unrealized gains, with Sonic Labs adding deflationary burn.
And Injective's EVM mainnet is live, bridging Cosmos and Ethereum. We also have Cardano partnering with WireX for crypto cards, Stellar backing clean energy tokenization, and Sui launching $USD USI. On the funding side, we saw some lighter raises, but security-wise, Polymarket Phishing stole over $500,000, so vigilance is definitely key.
Absolutely. Despite the mild dip, there are strong bullish undercurrents. The shutdown resolution, continued ETF progress, and increasing TradFi entry are all major catalysts. We're looking at potential targets of $110,000 for BTC if it holds $108,109,000 and $3,800 for ETH.
Right. And keeping an eye on U.S. inflation data and Fed speeches will be crucial for volatility. While meme and alt rallies like POPCAT hint at rotation, the analyst note really sums it up. Market fear is high, but structural adoption is accelerating. Smart money sees these dips as setups, not setbacks.
Exactly. It's an exciting time to watch these developments unfold. Thanks for joining me today for this market rundown.
Always a pleasure. We'll catch you next time.